Good morning, guys, and welcome to the show. Today is Monday, October 1st, 2018, and I'm going to tell you what. The dollar, U.S. dollar index, here's the thing, and gold and silver. An awful lot of guys out there right now within the financial community are saying the dollar's going to crash right away. It's going to crash, it's going to go down to nothing. They're also saying that gold and silver is going to continue to move down, 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 down. And all you hear is on these three things, gold, silver, and the dollar, is be careful, it's going to go down. You're going to lose money. Here's the thing. The Federal Reserve is withdrawing $50 billion a month of liquidity out of the system now at this point. How they're doing that is they're doing a process called quantitative tightening, and which means that every month when the bonds mature, they're cashing them in, getting the money, the Federal Reserve is, and then taking that money out of the system. So that liquidity is being drained. Those dollars are being drained out of the system. And it's just like a man right now. If you saw a man and he was bleeding, and I mean bleeding, seriously bleeding, you know he's only got a limited amount of time before he's going to collapse. Because the blood's being drained out of him. Well, the blood's being drained out of the system right now, and I'm watching the system, and I know it's going to collapse. This is what's going to happen. And when this system collapses, which is what I'm waiting for, what's going to happen is there's going to be panic. There's going to be blood in the streets. There's going to be panic, and they are going to run into three things, not crypto. They're going to run to gold, silver, and the dollar. Why? Is it's human nature. Human nature is to run for safety. It's also human nature to run to what you know. Cryptocurrency is new and experimental, right? It's going to be the wave of the future. Definitely going to be the wave of the future. But they're going to run to three assets, gold, silver, and the dollar. And one of those three assets is going to die. The dollar's going to die. So after they run to the dollar, that's a huge mistake, and the reason why it's a huge mistake is it's endless the amount of dollars that the system can create. So let's open the charts right now. Let's get into this. Let's take a look at cryptocurrency first. And then I'll talk a little bit more about what the subject that I was talking about how the dollars, why the dollar's going to die toward the end of this program. But right now, cryptocurrency, 65.82. That's what it is this morning. It's basically ceased moving. It's just sitting there waiting to do something. Its tendency right now, if nothing happens, we don't get any bad news or anything, this tendency is upwards, an upwards trend that's beginning. This upwards trend started at 60.94 when it bottomed right here at 60.94. That's when the upward trend began. Now we can see this trend line moving upwards very slowly. Why it's moving up so slowly is because everything's tentative with it right now. It's waiting for news and stuff. But it's slowly trending upwards. Any bad news could send it tumbling down below support levels. Support levels in around $6,000 or just slightly below 6,000. Say 5,800 is the red line for support. If it breaks through that red line for support, I mean, you know, we could lose a lot. So there's where we stand with cryptocurrency right now. And there is a problem, though. If we go to cryptocurrency market capitalization, so a problem is cropping up here. And I'm going to tell you what the problem is in just a second. First, the market capital is $222 billion, 51.4% Bitcoin dominance. If we move down here and we take a look, I'll show you what the problem is. It's this coin right here. This is the problem. Tether. Tether's got a bank that's based in Puerto Rico. And this is what it's dependent upon. And there's allegations out there right now. There's rumors floating out there right now that this bank based in Puerto Rico that Tether's relying upon is insolvent. Well, first off, as soon as I did the research on it and I found that the bank was based in Puerto Rico, I was like, ooh, 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 ooh. I was like, I'm glad I'm not in Tether. I'm glad I don't have any. Okay, so anyway, that's what's going on. But it's so big because Tether's the number 8 coin, quite seriously, with over $2 billion, 2.8, almost $3 billion in capital. That could adversely affect the whole cryptocurrency industry, to tell you the truth. And because Bitcoin is so tentative right now, if it breaks down through support levels, it could be a massive drop in Bitcoin. I don't know. I'll tell you what. I think that ultimately these coins are going to be massive in the future. Not too long in the future either. So it's really a smart thing to do is to buy and HODL them, no matter what happens, no matter how low they go. In fact, if they go low, you're probably best off to buy more. And this could, if we have problems in the cryptocurrency industry and the prices drop down, and if there's a major deflationary event that hits the United States, where they run to the dollar, they run to gold, they run to silver, and cryptocurrency is falls in price with the stock market, I would say that it's a golden buying opportunity, because this is the wave of the future. This is the money of the future. And these cryptocurrencies are just that, they're currencies. And I'm absolutely amazed that the government doesn't see them as currencies. The government sees them as property. This is ridiculous, totally absurd, because this is money. It's not property, it's money. Anyway, let's move on to the Dow Jones. Well, we're going to wait on the Dow Jones. What time is it? 10:24. We get 6 minutes to go before the Dow opens. For crying out loud. Well, we'll move through our other things and possibly it'll take 6 minutes. Interactive stock market chart here. We're looking at sweet light crude oil. And today we're up actually, up 0.11%, 73.33. That amazes me. I was expecting to be down on crude oil. Wow, it's getting high. 73.33. I never expected it to get this high for sweet light crude. And you know, the other crude's more expensive even. Probably, what, 76 or something. A few dollars higher. Wow, that's really something, the fact that crude oil's getting this high. We're going to start seeing that translate at the pumps pretty soon. Fairly high trading volumes, too, today. It looks like the trading volumes have been climbing a little bit. Now let's take a look at the silver price today. Oh, this is sick. But I'll tell you what, 10 minutes ago, I was looking at this chart 10 minutes ago, and I was saying to myself, now they come with the smash. That's what I said to myself in my mind 10 minutes ago. Just before this happened. It's happening live right now, the smash. And I was expecting it. When I seen the silver price slowly dropping there like that, I was saying, okay, get ready for the smash. We're going to go back down to the price we were before, maybe even a little bit lower. And we're in the middle of the smash right now. They're smashing it. Down 27 cents on silver. If the price wasn't already cheap enough. I'm going to tell you what. They're going to break this market. They're going to break the silver market. And when they break the silver market, they're going to break the entire system wide open. If they break the silver market, silver is like a fragile glass you're holding in your hand. And if you drop it on the floor and it hits the floor and it shatters, it's all over. It's all over for the entire system. Derivatives meltdown time if they break the silver market. And if they keep driving this price lower, they're going to break this market because they're going to run out of physical. They're going to run out of the real, honest-to-God physical metal, and they'll create a physical shortage in the 1,000-ounce silver bars. And it'll be all over. Bonds and rates today. What we're looking at today is the U.S. 10-year is rising, and along with all the others, we're looking at the biggest rise in the 30-year. We're looking at over 2 basis points, 1.6 basis points in the U.S. 10-year, 1.2 basis points in the 5-year. They're all going up across the board, but on the short end of the curve, we're not looking at quite as big a rises in the price of the bonds. So I expected this. I expected bond yields are going to rise. Interest rates are going to rise. Interest rates are just beginning a massive rise because we're at the end of a credit cycle. And we've had credit extended for like 30 years, massive credit into the system. And this is going to end very badly. Now, let's take a look at the U.S. dollar index today, 95.20. Okay, so we're not going to see this dollar dying right now. We got to go through this deflationary period first before the dollar dies. This deflationary period is going to come on suddenly. It's going to take an awful lot of people by surprise. I'm expecting it in the later part this year. I'm actually expecting it to happen in 2018 and to conclude probably in the first quarter of 2019. It's not going to last long. They're going to cure it by dumping money into the system. So anyway, let's go back and take a look at the Dow Jones. Are we open yet? 10:28, 2 more minutes. Well, we'll take a look at yesterday's anyway. Yesterday is 18,000, no, it's 26,458. It's down 18.38 points yesterday. The Dow Jones, pressure is going to be coming on the Dow Jones. What are we at, 5 days? Let's take a look at the 1 year here. Pressure is going to be coming on the Dow Jones industrial average. If we see these bond yields spike up higher, and we're going to. Specifically, the U.S. 10-year is going to have to breach 3.25%. So what were we talking about at the start? We were talking about the dollar going up, you know, and in value. The U.S. dollar index going up in value. Yes, it's going to when we get this big market crash that's coming. And it's the bonds market you got to watch to give you the timing of the big market crash that's coming. And this big market crash is going to have an adverse effect on an awful lot of things, but it's not going to have an adverse effect on gold, silver, and the dollar. Gold, silver, and the dollar is going to do really well during the crash because that's what everybody's going to run into to try to gain safety. It's as simple as that. So listen, thank you guys for listening to this market report. And stay tuned, and we'll have another market report tomorrow morning. And you guys have a really nice day today. And thank you for tuning into my channel. I really appreciate it. Bye-bye, guys.